Taking a peek at Smooth Love Potion here, we're still below the red box of resistance. It actually looks like we tried to come back up and retest it as resistance, but we never even made it up there, which just shows weakness in my opinion. Turn on the EMA Ribbon as well as the Ichimoku Cloud here. You can see the Ichimoku Cloud is printed red again, and it is starting to catch up with the price action. Not a good sign. You can also see the EMA Ribbon has also flipped back red, is widening, and we actually haven't even had a test of it yet, which really isn't that great. We really need to kind of be chipping away at this so we can finally break above it. So I'd have to assume the first test of the EMA Ribbon we see, we should find a rejection, especially considering it's widening here. Up on the 4 hourly, you can see we've been below the EMA Ribbon for quite some time. We actually have been testing this quite a bit throughout this move to the downside, so this could very well be a good sign. We did have an opportunity back here with the thin Ichimoku Cloud to break this to the upside, but we never took it. And ultimately, the Ichimoku Cloud is starting to widen again and curling to the downside, which isn't great. But considering that we have been testing the EMA Ribbon a lot, we could very well see a move like this, maybe to the top of the Ichimoku Cloud and then reject out of it, or even all the way up to this red box of resistance again before we find a rejection. If you take a look at the hourly time frame, you can actually see something pretty interesting here. Ever since this last move to the upside back here, we have been getting constantly rejected off of the 200 EMA, as you can see here, here, and here. That ultimately strengthens the probability that we'll break through it to the upside next time we come up to touch it. Take a look at the SLP issuance, and I've mentioned this in past. A lot of people say, oh, they're coming out with new burning mechanisms, this, that, the other, but I'm still yet to see a tightening of the burn versus mint rate. Now, it has tightened up a little bit, but nowhere near where it needs to be to have sustainable price action to the upside, in my opinion. So to sum things up, a move back down to this one level on the Fibonacci retracement, or this low, right around 0.08 cents, is likely on the table, in my opinion. And as you can see here, we're kind of just floating between Fibonacci zones, so again, a move down here is likely to happen. If we do manage to find somewhat of a bounce here, I think it'll be just that, just a small bounce before we continue to trade lower. And I would expect this rejection to really happen anywhere between 14 and all the way at the top of the red box at 17. So we could very well see something like this, or even like this. And ultimately, we got to start setting higher highs instead of lower highs here so that we can see a new uptrend forming. If we do manage to bounce here at the 0.08 cents level, we really need to restart the uptrend, or else it's just going to keep going lower, ultimately setting lower lows, right, which would be a continuation of a downtrend. So really, this is going to be our last resort of hope right here, 0.08 cents. If we don't get a double bottom here, it's not looking great. Really, if we break this level to the downside, we're going to have to redo some of the analysis to kind of figure out where we could potentially find a next bounce. This is all I have for Smooth Love Potion today. If you enjoyed this video, go ahead and hit the like button. If you haven't subscribed already, go ahead and do so, as I try to post content daily. As always, this is not financial advice, and I'll see you in the next one.